The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
This is Denise Nostrom, CEO and founder of Diversified Financial Solutions. Now more than ever, investment advice is needed. Not just where best to invest your money, but why. Are you investing for your future retirement? Are you retired and looking to maximize your income? Are you maximizing your income and concerned with leaving money for your loved ones? Are you investing for your retirement at the same time saving for your children's education and at the same time saving to buy another home? Are the markets in line with your goals? Are your goals ever changing? Please contact me at 631-758-8691. That's 631-758-8691, or visit us at diversifiedfinancial.biz. For over 25 years, I have been helping individuals, families, and business owners navigate through all market conditions with only one goal in mind, my clients. Visit me at diversifiedfinancial.biz or call Denise Nostrom, founder of Diversified Financial Solutions, at 631-758-8691. That's 631-758-8691 for a conversation about my most important client, you. Hello, thank you for tuning in today on Black Friday. I bet you're all full from your Thanksgiving meal. I hope the tryptophan didn't knock you out too early and you got some time to enjoy with your family and friends. But today you are listening to The Financial Chick Show, and I am the Financial Chick. My name is Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. I am here live every Friday from 5:30 p.m. to 6 p.m. on 103.9 LI News Radio. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you have any questions on anything we discuss on the show, you can check out my website at financialchickshow.com. We are also on Facebook and Instagram at Diversified Financial Solutions. So like our page to get updates and see what is happening. So here we are today. I am very excited to be here with the executive producer of LI News Radio, David Levenstein.
Hello, everybody.
How are you doing?
I'm doing great. I'm so glad to be a guest in your show because I sit in the booth with Mike and we listen to your show every day. And as you're speaking, a million questions rattle through my head.
Really? Okay.
And as a person who's listening, I figure and I assume that the people who are listening as well may have these same questions.
I bet.
Okay?
So
I'm going to hit you.
Oh my gosh. All right. Let's do this.
Okay, so it's
Feel Good Friday and it's Black Friday,
so
right?
Let's do a year in review.
Okay. Let's do it.
During the Trump administration, the market did great. Everyone was happy. Whether you like him or you don't like him, it's not a political commentary. The market just did great. Mm-hmm. What the fear is that now this new administration is coming in with all the taxes, the Democrats, blah, 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 raise the taxes, things like that. Right. The market was just going to take a dump. Mm-hmm. But it didn't.
Right.
It still forged ahead. In fact,
hitting all-time highs.
Hitting all-time highs, as it did during the 4 years of the Trump administration, but it's still going in the same direction.
During a pandemic.
Right, during a pandemic, during a botched Afghanistan, during the Rittenhouse trust, during all these things that are going on, right? Mm-hmm. The market still stayed strong.
Yes.
Unemployment, no employment, what's it called? Shipping.
Oh, the shortage. Yeah,
the shortage. Mm-hmm. We can't get any goods. The supermarket shelves empty. The market is still going strong. Inflation numbers, oil prices. Mm-hmm. Generally speaking, in the past, that would have an effect negatively on the market. Mm-hmm. But it seemed that's not the case.
Yeah.
Why? And should we be scared as investors that something is brewing?
Okay. Well, that's a great question. And it's a couple of things.
Okay.
I would say the first thing is that we have become such an intensely technological environment or country or world, really,
okay.
So a lot of the play that's happening is happening in the tech type of arena. Mm-hmm. So with the excitement of, electric vehicles that could be happening, people are still working from home in such a big the numbers are huge. I mean, people are starting to get back to work. So technology, if you take a look at, what is it? Not Facebook, but Meta. I think Meta is the new company. You got Google, you've got Amazon, all of these companies that are still hitting it hard.
Yes, but when I drive through my neighborhood, I see stores with help wanted signs.
Correct.
I read the other day that though those big large box companies, the big box stores like a Walmart and a Target and the Amazons and all that stuff, they're doing great, record numbers, right?
Right.
Small businesses are down 33 to 50%.
Sure.
20% of them have closed.
Well, this is the funny thing. The government always wants to, like, you know, they those big guys are the rich guys and everything. They're feeding them hugely at this point. You know, so it's kind of an interesting thing. Yeah, it's a sad. The pandemic has helped certain companies,
right? But
a lot of the bigger companies, but not the small business. Yeah,
right.
Yeah.
The ones that employ people.
Yeah,
the most people in this country.
Absolutely.
So where is all this money coming from to invest in a market that keeps it going higher?
Well, the thing is people are, you know, with all the stimulus that they're getting, I mean, there's still child care tax credits are coming. There's money that's coming in. You know, you have a lot of people that are retired, or unemployment. I mean,
are you finding
that people have a lot of money right now?
Are you finding that the people, and you know a lot of people who invest, are they using some of that money to go back to invest in the market?
Well, that's exactly, and that was my second point. So first is that we're kind of, you know, geared toward this technology. There's a lot of companies that have not done well. You know, you still have got the cruise lines that are not doing well.
Right.
Airline companies.
The whole
are not doing
hospitality
well.
industry.
I mean, all of that is, you know, so like there's still an area of opportunity when we get back, right? But like it's very centralized on certain companies that are doing well. But the other side of it is that, yes, people have been accumulating money over the past, well, we're almost 2 years, like from last February, or March,
right.
March of last year. And so they have money to invest. Well, I shouldn't say they have money and they want to keep it there. And they were like, oh, well, maybe where do they go? They go from money market, CD. Oh, well, the CD rates, they're not doing anything. Then they go to bonds and like, well, bonds have been knocked around.
Yeah, but they say they gave everybody the stimulus money thinking that was going to stimulate the economy. They would go out and spend it. And they did spend but they spent it in Amazon.
Yes. Well, that's it. Right.
That's
exactly.
what they did.
Exactly.
Because if they had spent it in the small businesses in our local neighborhoods, those businesses would still be open today.
Well, because Amazon is easy. People like it.
Right.
And unfortunately, a lot of the small businesses, and not all, I mean, I have to say down in Patchogue here locally, I mean, these companies, these businesses really, I hate this phrase, think out of the box, but they really did in terms of, you know, delivering food to people, doing like fun things that, you know, would bring them business, which I thought was
and
ingenious.
They brought business to the people. You told me that in Patchogue.
Correct, yes.
They did the crawl, right?
They did a crawl. Like
they delivered it to people's homes.
Correct. Every hour you got something, you know, which whether it was a drink from one place or, you know, a food or an appetizer. So it was just, but that was the thing. Small businesses really had to do things differently. Right. And the people that didn't, they really got hurt. And that was the sad part.
Because you couldn't be status quo in an environment that just wasn't.
Right, because people weren't coming in your door.
Right.
They A, they didn't want to, or B, they couldn't at that point, you know? So it's been interesting. But back to what we were talking about is that, you know, now they're sitting in money market. Like I said, I got a call last week that this woman said, I have anywhere between 125, 150,000 that's been accumulating in my bank account. I don't want to put it in CDs. I need to put that money somewhere.
Was she afraid in the past to put it in the market?
Yes. But she was still, you know, a little bit reticent about doing it.
Should people be afraid? Should people be allocating out of equities because we've had 4 or 5 years of record highs every year?
I think it's a very selective market. You know, the way I'm dealing with new money or people that are coming new into the market is A1, we're not going right in. If they have a large sum, we're dollar cost averaging, moving in slowly.
Right.
So I tell them that if, you know, the market does take a dump, which it will at some point, it's got to come down. You know,
people have to sell to realize their gains.
Right. Well, but there's people that are in and new people. But we're talking about the new people going in. We're going to go in slowly, and if the market keeps going up, they're winning. If the market takes a crack and goes down, then we deploy that money into the market, and they're buying it at cheap prices. Sure. So, you know, it's kind of a win-win. People that are in the market, you know, take a little bit of money. If you know, I was talking, I think last week about the returns, 30%, 40%. If you're in year over year, take a little bit of that money off the table. You are not going to get 40 or 30% again.
Isn't it weird psychologically that when Macy's has a sale, when things are on for sale, 50% off jeans, whatever, people run in to buy that stuff.
Absolutely.
But when the stock market's on sale and the stocks that were trading at 100 are now 50, people are stepping away.
People are like, oh no, it's not a good company anymore.
But they want to wait till it goes back up to 120 to buy it. If Macy's says, hey, jeans that were 50 are now 130, no one's coming in to buy.
Nobody.
But people do jump in the market.
It's so true.
Right.
So true. And you know, as
buy bargains.
I always try to explain that to people when and they'll come in and go, wow, like this is, it's doing so well. I should buy more. I'm like, no. Like I just had a call with a client. He's like, wow, we just started up a new account. He's putting money in monthly. And so, the account's off a little bit. I said, but that's what we should be seeing, because that means it's stuff that's going to kick off. It's going to be good in the future. What was the hockey player? You want to go where the puck is, not where the puck is. So that's my whole thing.
Say that again.
You don't want to be where the puck is. We want to go where the puck. I just totally messed it up. But you want to go where the action is going to be, not where the action is. So, like in investing.
Okay.
We're running close to the break, so we'll go back to that in a second. But you are listening to The Financial Chick. This is The Financial Chick Show and the company's diversified financial solutions. I help you look for solutions when you feel like there are none. Feel free to contact me at 631-758-8691. So we're going into the break, and we're going to fine-tune that hockey quote so you know what we're talking about. See you after the break. Welcome back. This is Denise Nostrom, the Financial Chick. My company is in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I am here to help you on your financial journey. Over the years, things change, and I am here to help you navigate all of those changes. So before the break, I was trying to do a quote, and it really just went nowhere. So we've solicited the help of Mike, the engineer, who's going to now read the appropriate quote, and then we will kind of seam this together as to what we want to talk
Michael's
about.
not just an engineer. He has a podcast called The Yappin' Yankees.
Nice. All right. I did not know that.
You're
Go,
the
Mike.
best, Dave. Thank you.
Yappy, go to. How do they find you?
Yapping Yankees is available on YouTube, SoundCloud, Apple, Spotify. Just type in Yapping Yankees. It'll come right up.
Awesome.
Yankees podcast.
Yappin' Yankees. All right, go ahead.
All right. I dig it.
But yeah, so Denise, the
Yes,
quote
okay.
you were looking for is by Wayne Gretzky, and the quote is, "A good hockey player plays where the puck is. A great hockey player plays where the puck is going to be."
There you go.
Okay,
Thank you, Mike. So
so how do you equate that with
all right.
investing?
So the way I equate that is that, yes, we all know the stocks or mutual funds or the investments that are doing awesome right now, right? That's not genius, you know, because we see it. But to be the one to forecast where things are going to go, now that is where the genius comes in.
Yeah, but how do you be a soothsayer? How do you
I'm not going to say that, but what I'm saying is that, there's certain trends that go on. I usually read some numbers that I say, like, what were the top performing sectors, the bottom performing sectors. There's something to that, and there's a reason for that.
Right.
We want to buy the things that are cheap, like you were talking about at Macy's with the jeans. Everybody.
Okay, so what's cheaper? Hospitality stocks are cheap right now.
Right.
Are they ever going to make a comeback? I mean,
at some point they will, but
they have to think out of
where
the
the
box.
crystal ball is
Right.
that we don't know when that's going to happen.
Right.
Do we know they're cheap now? Absolutely.
Right.
Could they go down again? Absolutely. If we close down, we've heard things of late, what's happening in, certain countries closing down. And
for example,
that could give us a setback.
Disney Cruises said that no one without a vaccination, 5 and under,
I know, I heard that. Yeah.
cannot go on the boat.
Correct. Yeah.
Disney's a leader in that industry.
And
So-
the rest will follow suit.
And they'll look and see how that pans out for Disney.
Right.
And depending upon that, Carnival and all the other ones will follow suit,
Norwegian
right?
and all of them.
Right.
Yeah.
And they'll follow their leader. Let
Yeah.
some person, take the bold stance. That's a gamble.
Of course it is.
It's a
Absolutely.
big gamble because people are still very emotional about giving their children the vaccine.
Right.
And so there we go. So
But from a financial perspective,
Yes.
right? Unless you think cruising will never come back again, maybe then you don't buy it.
Right.
But if you feel that it is, and if you have the proper time horizon, if you're investing you shouldn't be investing if it's just for a year or two. But if you have a long time, time horizon,
Right.
this is how people create wealth.
Right.
You want to buy things before they take off, not when they've done 50% and then get in and then think that's going to replicate 50%. That typically doesn't happen.
So let's talk about people creating wealth. We just did. I want to talk about people creating income for themselves. Okay. Because generally, historically speaking, like with my parents, they buy stocks. The stocks grow. They retire. They sell their stocks and they buy bonds. They buy some corporate bonds, some tax-free bonds. They buy maybe some REITs, some preferred stock, things like that.
Sure.
They have great yields and they live on the yields. that doesn't exist anymore.
It does not. It does
So then
not.
how do then people spend their time? They grow their portfolio, they retire, maybe have a little pension, they have the Social Security, they got a few bucks, and now they want to create an income. How do they create that income for themselves without the fear of them outliving their money, without exposing it to too much risk? How do people do that now? How do they retire?
I have a few different solutions for that. One of which I think for most, well, just for most people, but for people is if people are retiring and they're coming out, usually their biggest assets is their 401ks, 403bs, teachers, working for companies and everything like that. We take a look at what they're going to need. If they have a pension, let's throw out a number. Let's say they need $4,000 a month and maybe they have $2,000 in Social Security and they don't have a pension. So they need to create $2,000 a month to make ends meet.
Not live on Long Island.
Well, I'm just giving examples, just giving numbers.
Right.
So you're absolutely right. So those people may have to move to another state.
Tennessee.
But right. So we take a certain amount, like maybe a year or two, that are just going to be in a money market. So we solve for what they need and then invest the rest. You don't want to go into in the investments right away, because if the market takes a dump, it doesn't do so well. Now their principal is way down.
Right.
So it's a way to kind of give us some time to build up that portfolio and make adjustments and kind of create that wealth down the line.
Isn't it scary for someone who's retired to say, okay, I'm going to take a couple of years of income out and put that in cash and live on that and then invest the rest? Because let's say the market does take a dump. Let's say they say, wow, holy cow, here it is, 36%, the market's down, and now I had $600,000 and now I have $4.
Well, another solution to that, especially for those that don't have any type of pension and maybe just their sole guarantee. Well, I don't even say guarantee. Social Security is not a guarantee, but that's for another show. But if they're
mostly guaranteed.
Well, yeah, pretty much.
It's almost guaranteed.
Like I said, that's another whole show.
Right. Yeah.
But we look at annuities with a
Right.
guaranteed income rider, and now with that, yes, is it investment? Sure, but the beauty of it's you're solving more for income. Now, is there cost to doing that? Absolutely. But to know that you're going to get that check every single month, even if in many cases, if that account balance goes to zero, you will still get that income every single month.
Is it are people afraid more of outliving their money, or is it just the general wealth? I want to have wealth, or is it income? Because I know for me, in my mind, what I don't want is to be a burden on anybody when I
would say the majority of the people are about outliving their money.
Right.
I do have some that they're in good shape that they wouldn't have to worry about that.
Yeah.
But I think even the people that are in that situation they still have that worry that they're going to run out of money.
If somebody makes
we're all
right, but let's say someone makes $100,000 a year, okay, and that $100,000 a year they go, I'm going to retire now. Right. And so people in their mind think, I can live on 60-70% of the income. But in my mind, I'm like, well, I don't spend any money during the day because I'm at work. So when I'm retired, I actually spend more money. So I don't want to get a reduction in income.
That's another big misnomer, that people think they're going to spend less. Now, to a certain extent, yes, because you're not paying into Social Security and Medicare.
Right.
And your 401k or 403b. But really, the rest of it is typically going to be there.
Right.
And now think of late, of what's happening, inflation.
Right, but how much do you have to replace $100,000 of income? So you're going to have your Social Security, $3,000 a month. So now you got to replace $6,000 a month or $5,800 a month. How do you find $5,000 a month? Let's say that's $96,000.
How much money do you have saved? How much have you put?
How much do you need to get $5,000 a month?
Well, if you have I use this with my clients all the time.
Sure.
If you have $1 million and you take out a 4% withdrawal rate, that's $40,000 a year.
Okay.
So that's
can you take
$2 million.
Can you take out 4%? And get $40,000, then you have your Social Security. So now you're at $7,000. You're pretty close. Mm-hmm. But if you have $1 million, can you take out your 4% and not outlive your money?
That's why we do a plan to take a look at, and we project out different things. There's different solutions there too. Do you want, maybe you're living in a home and you can downsize. So maybe you sell a house for $800,000 and maybe you buy something for $5,000.
Right.
And now that's going to go back into your portfolio. Now that's a source of money or an account that we can now utilize to derive income from.
Right.
So there is ways. That's why what I love what I do, it's not just the investments, although that's important. I do a lot of planning because those are the questions that, oh, I have an investment. Okay, that doesn't tell me anything.
Right.
Give me the gory, give me the deep down, what do you want to do and how do you want to do it? And I'll tell you if you can.
Right.
And if you can't, well, what are some alternatives to make that?
Well, if you can't, I have an alternative. Start smoking cigarettes and start eating White Castles and cheeseburgers.
Such a negative Nancy,
no,
aren't
but,
you?
but that's what it is. I mean, if you can give someone a nutrition plan that matches how much money they have and they can die in the same day,
then that would be something. That would be a whole other marketing plan.
And the scariest thing is if someone comes to your office and says, "Well, I recommend 3 banana splits and a lot of 2 packs a day cigarettes," you know you're gonna outlive your money. So, so you got to match the nutrition, with your financial plan.
Absolutely. And isn't every day a risk, right? So we just never know every day. But
thank you for having me.
Oh my God, thank you so much for coming in, and I'm glad you made it through Thanksgiving. And and of course,
and I had my nap with my tryptophan.
Okay, yeah. And speaking of how much calories that we've consumed, but now we go back until Christmas or Hanukkah. Well, Hanukkah's this weekend. Right?
Hanukkah with fried foods and Christmas with we celebrate every holiday.
We're so doomed. I guess January.
Thank God I don't have much money because I'm going to be eating myself into my grave and still have money left over.
There, woohoo! Well, thank you so much for tuning in today. Happy Thanksgiving. Well, it's the day after, but I hope you had a happy Thanksgiving, and I look forward to hearing or being with you next Friday. Have a great one.
Advisory services offered through Blackridge Asset Management, LLC, a registered investment advisor. Securities are offered through Peak Brokerage Services, LLC, member FINRA, SIPC. Blackridge Asset Management and Diversified Financial Solutions are separate and independent entities from Peak Brokerage Services.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.